Welcome friends to another session of NPT Banking where you can bank upon for alerts and help during the statutory audit period of banks as well as for the bankers. This is your host Nitan Trilokekar, trying to put into perspective the issues of consortium lending, especially when you are neither the banker nor the auditor of the principal banker. You are aware that when the lending amount is high, the solutions that the bankers give is either consortium or multiple banking. Multiple banking is when separate facilities are given by different bankers. For example, a small bank cannot give export finance and therefore export finance is taken from some other banker. That is multiple banking where different borrower papers are also signed. In consortium lending, member banks come together and they pool their resources and a common documentation is done and the borrower is financed. Under consortium lending, the principal banker is the one normally whose share is of lending is the highest. Now that banker is supposed to and normally do observe, control and monitor the borrower. The member banks are not able to do that as a principal banker because normally the operation of the account is restricted to the principal banker, which was not the case earlier and we had that confusion. So since that was a past, let's not discuss that. Currently, the principal banker transfers the interest and service charges, etc., whatever it is, to the member banks to ensure that the account does not become NPA. Other information, of course, is shared by the principal banker in the form of consortium meeting. This meeting is attended by senior bankers of the member banks. As you are aware that the amounts are large, normally above 500 crores is the amount which is lent to such borrowers. It will not be attended by a clerk, but a very senior officer, AGM level or so, and above, will be attending. And the minutes of these meetings are available with all the member banks. Since I mentioned this, I hope you remember to ask for the minutes. The common excuse that the minutes are not received, only last year's minutes are there and 4 minutes are not available, that should not be accepted by you as an administrative overlap by the principal banker, and you should insist on asking for it, because the dangerous situation that the operations of the borrower may have stopped even though the accounts don't reflect it, and then you will have a problem tomorrow and your problem is my problem. Remember that when every scam hits the newspaper, the auditor is the one who is looked at with suspicion of not performing his duty. So we become NPD, not performing duty, which is reflecting on the industry as a whole. And people are not able, or even the reporters are not able to look into the intricacies that this is a member bank and not a principal banker, and this is the auditor of a member bank and not of the principal bank, and therefore there is a limit to what he can see. They don't see that. Therefore, apart from the minutes, I would ask you to look at also the inspection reports of the borrower. Look at the date, how old it is, and then look at the comments. Also look at what is between the lines. Since the borrower is so big, even the inspectors will be trying to toe the thin line between politeness and duty and write something between the lines. If you can read them, then you don't have to write between the lines. You can write it up front. I'll give an example where under the consortium advance, the borrower had enough stock. This was reflected in the inspection report. When I saw the stock statements also, I noticed that the stock was going up. Therefore, I asked, is there any correlation we can have with the pending order book, why the stock is going up, especially since it's chemical, and like pharmaceutical, every chemical stock has a life. So in case they are just stocking it up, then it will end up as a dead stock tomorrow. When certain questions, this question was asked, started getting veiled answers. And we insisted on going to the borrower and looking at the order book, where we realized that the main customer of the borrower had cancelled his relationship of maybe 5-6 years with the company. And if 80% of the stock of the sales of the company are with this customer, and if he has cancelled and with no knowledge to the bankers, you have a problem with this account. Therefore, we had to share this information with the principal banker through my banker, and my banker means where I was doing the audit, and I had to write it that this is may not be an NPA today, but it is an NPA definitely, because there are no efforts there is no pending order or substitution of this customer, and this company's other stock will become dead stock very soon with the expiry of 1 year or 6 months from the date of the balance sheet. Another case was where an LC was devolved. That is, money was paid by the banker and money should be immediately recovered because by a debit to the cash credit account. So whatever credits come into the cash credit account, the amount is recovered. However, this LC was issued, as I mentioned, may not have mentioned earlier, that under multiple banking, what happens is, suppose a banker does not have a import-export facility, the borrower does this with another bank. In a consortium also, this is possible because the borrower may feel comfortable with one member bank. So in this case, this was a consortium advance where a borrower felt comfortable with opening of an LC with one member bank and not the principal banker, and the LC was devolved. Devolved means the borrower had no money to pay, borrower did not pay, and therefore the banker paid. When I found this out, I had just come in the same month for the audit, and around, let's say, I think 170 days, at that time the NPA norms were 180 days, and 165 days had already elapsed. No communication was done by the member bank to the principal banker regarding this, which was a big administrative lapse. Perhaps the bank branch was not headed properly earlier, and on the same day of my reporting, a new head of the bank branch had come over there. So it was news to him, and believe me, if it is news to the bank manager what you have found out, then it is a problem. So I did my duty of reporting. The member bank did the reporting to the principal banker. Amount was recovered, and let's say the fairy tale ending of everybody lived happily ever after. However, the administrative lapse had to be taken care of, which they did internally. But this is what happens. You need not relax on the capabilities of the staff, and therefore look at what is outstanding, which accounts are outstanding, and why they are outstanding. Consortium advances are not as easy to monitor as a small advance or an individual advance or a single account advance. Multiple banking also has a big issue. I'll tell you a very funny story. You are aware that we are appointed as concurrent auditors by more than one bank. There is no restriction regarding that. So I was appointed by 2 banks where a borrower had a consortium advance in one bank. In another bank, a smaller bank, the same borrower had taken bill finance, but the bill finance items were not of the trade. They were machinery and all this, which, infrastructure development. So I said, you can't have bill finance for infrastructure, and what the hell is going on? The banker said, no, we got, the small banker said, we got entry into this account, etc. I said, your business tactics are okay, but I have a problem regarding finance itself. The bill finance is done for the trade, that is the manufacturing of the goods or trade of the goods. Here they are doing for machinery. It was for chemicals. So they are buying mixers and dryers and that and this and that, whatever. Then I noticed the name. Now you are aware that you and I have signed a non-disclosure agreement with the bankers saying that we will not disclose the information of one banker of the accounts to the other outsiders. Now I had a problem. Should I tell the consortium banker when I am an auditor that he has borrowed, on what basis? Then my non-disclosure agreement with the smaller bank also goes away. So I did a very clever thing. I did not say disclose it, but I made sure it is disclosed. How? I ensured inspection of that same borrower in the same week on behalf of each of the banks. So now when I went the next time on behalf of the principal banker, the factory manager said, "Arey, I have seen you before. Haven't you come before?" I said, "You tell me why I have come before." He said, "Oh, you came behalf of that bank." So now the principal banker's staff was with me. He stood up. He said, "What? Which bank? They are not in part of the consortium." So the factory manager says, "I don't know all this nonsense. This fellow came on behalf of A bank, and now you are B bank. You are both my bankers. So I will show you everything around." So the principal banker officer then asked me which bank, which branch, etc. I said, "You go ahead and ask. I can only identify the branch, and you found this information from the factory manager and not from me. Therefore, I have stood by my non-disclosure agreement, and that's it." It was a very difficult account. The account went down because of that, because naturally, if the borrower is desperate to go outside the consortium and to borrow, he has violated the terms of the consortium and is desperate for cash flows. And that to cash flow for capital, that means the return is not going to be very soon at all. And this had to be, account was saved only because it was taken over. It lived for a few more years after takeover. That much is the conclusion I can give you. So in conclusion, consortium advances require a special care of monitoring because of the relationship, the monitoring data which is available to you and the amount. Because what we say the probable, the dash hits the ceiling when it goes down. And although you may not be actually in a position to have monitored it earlier, yet you can do this, as I told you earlier in this clip, and try to ensure that it is reported in case the certain circumstances warrant them to be reporting. All the best for this branch audit of this March 2022. See you later on the other side. Next clip.